Most people think geopolitics is something for politicians, generals, and TV experts. They don't realize this. Every big move in your financial life is sitting on a geopolitical fault line. If you don't understand the world map, you don't understand your money. Let me show you why. 1. Oil wars become inflation at the grocery store. In 1973, a war in the Middle East triggered an oil embargo. Arab oil producers cut supply to the US and its allies. What happened? Oil prices quadrupled, gas lines around the block, inflation surged, growth stalled. They even had to invent a new word, stagflation, high inflation and low growth at the same time. Most people thought it was an economic crisis. It wasn't just that. It was a geopolitical crisis that became an economic crisis. Fast forward to Russia-Ukraine 2022. Same story, new actors. Crude spiked above $120. European energy bills doubled. Inflation spread globally. Now look at what's happening right now. On February 28, 2026, the US and Israel launched strikes on Iran. In 16 days, here is what geopolitics did to your money. Brent crude went from $65 to $105, a 60% increase. Gas prices in the US jumped 70 cents a gallon in 2 weeks. The Dow dropped to its lowest point of 2026. South Korea's stock market suffered its biggest crash since 2008. The world's largest LNG plant in Qatar was hit by Iranian drones and shut down. European gas prices surged up to 50% in a single day. Qatar's LNG expansion project, worth billions, pushed back to 2027. Ship transits through the Strait of Hormuz fell from 150 a day to single digits. The World Economic Forum called it a structural shock to the world economy. Goldman Sachs said if oil averages $110 through April, U.S. inflation hits 3.3% and the Fed cannot cut rates. That is not theory. That is geopolitics hitting your fuel bill, your food bill, your mortgage rate, and your investments in real time. If you own airlines, shipping companies, energy-intensive businesses, you are not just trading stocks, you're trading geopolitics. 2. Power shifts change which currency you can trust. For 50 years, the US dollar has been the backbone of global trade. A big part of that came from a single geopolitical deal struck in 1974. Saudi Arabia agreed to sell oil only in dollars and hold reserves in US treasuries. That arrangement strengthened the dollar, made US assets more attractive, and lowered borrowing costs for America. Now that relationship is shifting. China has cut its U.S. Treasury holdings from $1.3 trillion in 2013 to just $682 billion today. Yuan-denominated oil deals accounted for 24% of daily Brent crude volumes by early 2025, up from near zero a decade ago. Russia now conducts 90% of its bilateral trade with China in yuan and rubles. Saudi Arabia has joined China's M-Bridge payment system, a direct alternative to SWIFT. And then on day 15 of the current Iran war, something happened that financial historians will study for decades. Iran announced it would allow oil tankers through the Strait of Hormuz, but only if cargo was traded in Chinese yuan. 20% of the world's oil flows through that strait every single day. Iran just attempted to turn the world's most critical energy choke point into a mechanism for dismantling dollar dominance. Charles Schwab's research team said it plainly this week. Our view of geopolitical fracturing and a shift away from dollar-denominated assets remains intact and is potentially strengthened by the nearly unilateral start of the war in Iran. What does this mean for you? It means the risk-free assumption behind the dollar, treasuries, and US-centric investing is no longer just economics, it's geopolitics. If the dollar weakens as alternative systems are built, that affects your savings, your bonds, your cost of imports, and global demand for US assets. If you don't follow geopolitics, you get blindsided. If you do, you can position yourself ahead of the shift.
3. Your portfolio isn't diversified if it's geopolitically blind. Most financial advisors say, own some stocks, some bonds, some international. You're diversified. No, you're only diversified on paper. If all your assets depend on one currency, one military power, one trade system, one set of alliances, then one geopolitical shock can hit your entire portfolio at once. Look at what happened in the last 16 days alone. Japan relies on the Middle East for 90% of its crude oil. South Korea gets 70% of its crude from there. South Korea activated a $68 billion emergency market stabilization program in response to war-related volatility. Europe, which spent everything fighting the 2022 Russian gas crisis, entered this war with gas storage at just 30%. Germany at 20.6%. Asian markets reacted harder than US markets. European markets felt it through energy. US markets felt it through inflation expectations and rate cut delays. Morgan Stanley told clients this week, geopolitical risk is becoming a persistent part of the backdrop, not merely episodic. Investors may need to price in a world where regional blocks and strategic competition drive markets, risk premiums, and asset allocation. Translation: where you invest geographically is no longer just a growth decision. It is a geopolitical risk decision.
Most people are financially uneducated. Worse, they are geopolitically uneducated. They know the price of their coffee, but not why energy prices just spiked 60%. They know their mortgage rate, but not why the Fed just delayed rate cuts again. They know their stock is down, but not which war, sanction, or drone strike moved it. If you want to build and protect wealth in the world we are living in right now, you need 3 layers of education: personal finance, cash flow, debt, taxes; asset education, real estate, business, commodities, equities; geopolitical awareness, who controls energy, trade routes, currencies, and security. You should know this by now. Wars move oil, sanctions move currencies, alliances move trade, and all of that moves your net worth. You don't need to become a foreign policy expert, but if you want to protect and grow your wealth, you must understand that money doesn't move in a vacuum. It moves along the lines of power. Geopolitics tells you where power is shifting. Financial education tells you how to position yourself when it does. This is Geo Markets. Every day we connect the dots between the map and your money. Because in this world, being geopolitically blind isn't just expensive, it's dangerous. If this video changed how you see your money, hit like so more people wake up to this reality. Subscribe and turn on notifications. We post daily breakdowns of exactly how global power shifts affect your portfolio. The next 60% oil spike won't wait for you to catch up. Neither will we. Geo Markets, where world news meets your wallet.